My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 22nd, 2021, and Bitcoin is still ranging. Okay, we've said that Bitcoin was likely to range for 5 to 8 days since the 18th of November. We're now the 22nd. We're 4 days in. Okay, so is Bitcoin likely to continue to range? Yes, I believe so. Let's look more closely at this complex correction, right? One, to be able to learn more, because the more you know, the more you make, right? The more you know, the more you can make. And two, let's see when the correction's likely to be complete, okay? Just a word about complex corrections in Elliott wave theory. As you know, they occur in double threes or triple threes. Triple threes are exceedingly rare, but you do see them. I actually pointed one out the other day. A double three is the more common correction, the WXY correction, okay? But even within the WXY correction, W can be comprised of a complex correction in and of itself. Same with X, same with Y. So it's very difficult to trade. It's a no trade zone for most people, okay? However, if you are very, very careful and you use really good risk mitigation, it's possible to trade the range, meaning you're trading the tops and the bottoms, right? So if this is your range right here, actually, what am I doing? Let me just pull out my trusty regression trend. Right? It's possible to trade the bottom to the top to the bottom back to the top, okay? Because you do see that kind of trend, right? However complex it is, it's going from up and back down, and then it goes back up again. It follows a general trend, right? And we all know that corrections occur in threes, right? So we typically get either the double tree, well, we do get either the double three or the triple three. So we were expecting, this is one leg. This is the second leg, right? The the X. We can expect another leg up at the very least. Okay, we can also, if it's a triple three, get this, that, and then that again, right? So there's no telling. You can't tell in advance if it's going to be a double three or a triple three. You can't tell in advance if your first leg or your first wave of the correction, the W, is going to be a zigzag or a flat. You can't tell if the X is going to be a zigzag, a flat, or a triangle. You can't tell if the Z is going to be a zigzag, a flat, or a triangle. And if that is the end, right? That's why these are so complicated. That's why exchanges make the most money here in this region in these complex corrections, because people are fighting against themselves. Even people who know that this is a no trade zone still trade because of the impulse to trade. You know, people love trading. It's like going to Vegas and saying, all right, this particular machine is not a good machine to gamble on. It's just not, the odds are not in your favor, in the very least, in the slightest, right? Bad risk to reward ratio. It's very difficult to mitigate risk here. But let's say it's the only machine on the strip. Guess what? Even the people who write research papers about how it's not a good investment are going to be playing that machine. That's your complex correction. All right. So I think the hardest thing here is the discipline required not to trade it, or if you're trading it, to really, 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 really mitigate risk, to minimize the amount you're willing to risk in case of a loss. Okay, so that's my key to risk mitigation and to trading these complex corrections using Elliott wave theory and just common sense, right? Up, down, up, right? And then maybe down and maybe up again. Now, what am I doing? I'm a degenerate. I have to trade. I'm a trader. It's in my blood. Like, I wake up thinking about trades. I go to sleep thinking about trades. I'm going to trade this. And my next trade is the following. All right, let's go. Hey, just a quick word. It's Black Friday. Happy Thanksgiving, by the way, everyone. It's coming up. So Black Friday is coming up, and you're seeing all these sales. One in particular that I want to bring to your attention is the TradingView sale. Okay, so TradingView is the platform that I'm on, obviously. That the platform that you're probably using to chart, that everybody uses. Yeah. Now, TradingView during Black Friday offers epic deals, 60% off some packages or all packages. I don't know, but essentially the package that I need for what I do, right, is the premium package, the highest package, right? Because I need all that data to do what I'm about to do right now, to go into the 1 minute chart, to actually see activity and not see chop, and to make sense of it, right? I need the premium, because if you go Pro Plus or the regular, you can't see all of this information. You don't have enough data streamed, or sort of you don't have enough data allocated to your account for this to be possible. So I would suggest, if you're serious about trading, if you really want to make, good, clean entries and on the small time frames, you need the premium account, okay? And if ever was a good a time to get it, it's now, right? Instead of paying 600, you're paying like 200 or something like that. And I don't know if you can mix it, or if you can bundle it with a referral discount, but you do get $30 off if you use my referral. It's in the description. So just a word. I'm definitely taking advantage of it. Black Friday is when I renew. Basically, instead of paying 600, I pay 200. Anyway, back to what I'm going to trade. Okay, so I went on the 1 minute chart because I gotta set this up on the 1 minute chart. I need definition to make my entries. So right now, just zoom out really quickly for some context. So we did the W, right? Actually, let's go in the 1 hourly time frame. We did W, A, B, C. We did X, A, B, C. Now, X, see, the tricky, messed up thing about these complex corrections is this can be X complete, or it can be one leg of X. This can be one leg of X. This can be the second leg of X some way, somehow. Right? It within every leg, you can have compounded complex corrections. This is why it's so difficult, and don't stake money on the fact that you know that this is W complete, this is X complete. If you're trading these things, which I wouldn't recommend, but if you have to trade them, and knowing yourself is step one of trading, right? Mastering yourself, your psychology, understanding what you're likely to do. So if I know I'm likely to get in a trade anyway, okay, then if Dean's gonna trade safe. Okay, if the kid's gonna do something crazy, might as well put a helmet and make sure you got insurance. So I've got this as my X, purported X. This could be the start of my Y, or it could be a continuation of my X. I don't know. But whatever happens, I've got this big pump to the upside, and I need to go on the smaller time frames now to see some definition. So I go in 5 minute. I still can't see. I still can't see any wave structure in this pump. That's why the smaller time frames are useful sometimes, just to be able to tell what the hell is going on. So even on the 1 minute chart, I don't see much wave structure. I go on the 30-second chart. I can start to see something. All right, 30-second chart, I see 1, 2, extended 3, 4, 5, okay? And ever since that, I'm getting my correction, right? So 5-wave impulse up, and now you get a correction. Impulses usually correct to the 382 or the 236, right? So this is likely, okay, this just hit the 382. So it could be over. It could come all the way down to here. But all that I'm saying is now, very simply, you went up, you come down, you're going back up again. What that's going to form, maybe we're doing an A, B, C, perhaps, most likely, right? I don't know, but that's not very, very, very important. It is kind of in terms of setting my targets, right? So let's get out of the 30-second chart. Let's go back to the 5-minute. So let's say I want to set a target for this. I do my Fibonacci extension. I start from the bottom, go to the top of this thing. The retrace, let's say, it ends on the 382. And usually it goes between the 1 and the 1236. So let's see what that would mean in the larger scheme of things. So if it went to the 1, it would be way above our 382 kind of limit for this fourth wave correction, if this was still a fourth wave, if this was indeed a fourth wave correction. So I don't anticipate it going to the 1 and 1236. C waves can retrace to the 618 or the 786. They retrace, to a lot of different levels. So let's just say if I was a conservative trader, which I am, I'm going to set my take profit probably at the 618. 618, which is the origination, or let's see, probably 618, between 618 and 786. 618 is conservative take profit zone. So that's pretty much what I'm going to do. And then the second thing I'm going to do is I'm still going to follow my rules, even though I'm in this kind of wild, wild west no trade zone. What I'm going to do is to long. One of my rules is, it used to be that I long B waves. I don't long B waves anymore. It's too risky. The larger my account gets, the more risk averse I am. Okay. So if I want to be smart, I'm going to trade wave 3. What does that mean? Okay. So any reversal starts with, the 3-pronged kind of trident, I call it, right? A wave, B wave, usually the B wave comes down a little bit, right? Let me redraw that. Any reversal goes A, B, C, right? You get those 3 prongs, right? Usually. You also have V-shaped reversals, but this is also a V-shaped reversal in other terms, okay? So what I do is, I used to get in on here or here, but that's too risky, because if this is not the reversal point, then this comes down and retraces on you and stops you out, okay? So I don't do that anymore. What I do is I wait and observe for this type of action. And you can see this all over the charts, right? And then I wait for this. So if this is A, this is B, I wait for C, the breakout, and then I buy on the retest, which is basically the 2 wave. Okay, so this is where I plan to enter this long, and I'm going to long this, like I said, to the 618. So I'm going to set, and very, very simply, this is not Dean said do this, right? Again, I'm just showing you what I'm doing because I want to enter a trade. I feel like trading, so this is what I'm going to do. I'm going to wait for that reversal. If this is the end, if it's not the end of this correction and it's going to the 236, guess what? It's going to continue down, and I will not be the worse for wear because I'm not getting in until I get that breakout. Okay, so that's one of the sort of safety measures of this longing strategy. Okay, so I'm going to wait for this, and then the retrace of this 1 wave, because this should be a 1 wave. Okay, this is A, this is B, this is C. The C portion of this correction, of this zigzag correction, forms your 1 wave, and then you get your 2-wave, which is the retracement of that. And so my stops are going to be very tight, and I'm going to simply take my fibs from the beginning of the 1-wave to the end, okay, and I'm going to set my stops about 2/3 behind the 618. Does that make sense? Because you can always get some wicking, but usually I'm basically referring to Gann principles. Halfway point of a level is a good measure of control, meaning if price comes down below or up until the halfway point, but not exceeding the halfway point, the level hasn't necessarily been breached. Okay, that's why I hide my stops a little bit below the halfway point, which is approximately 2/3 of the way into the 618, right? So I'm going to put my stops here, my liquidation point 0.5% below that, and then whatever leverage that is, I'm longing this sucker all the way to about here, which should give you approximately 2.3%, right? And think of the leverage that you're using. Depending on what leverage you're using, that could be a good trade. Okay, so that's pretty much what I'm doing. That's what I'm seeing. Excuse me. We're still in our complex correction, as I stated, and who knows how long it can go. Just judging by what we saw up in the 2-wave, if this still is indeed a 4-wave, right? Judging by the time it took us to complete that 2-wave, if that 2-wave was simple, which it most likely was, given that that took 4 days, and I think 4 days, 16 hours, last time I measured it. And this has so far taken only 3 days and 20 hours. It's very likely that we spend at least 2 more days in this complex correction. So make of that what you will. Let's see, 4 days. 4 days, 16 hours. So I would say at least 6 days, 6 to 8 days is a good approximation. It's a good estimate. See, look, I know some people, those of you who are interested in charting, those of you who are interested in trading principles, techniques, all that stuff, you're geeking out on this. Some people in our space are only they're only interested in when moon, sir, and what's the price prediction and stuff like that. Like, that's cool, but you need to get a little bit more in the weeds. You need to, if you really want to make it, if you really want to trade profitably and invest profitably and be able to read a chart, you need to look at these little complex corrections and really learn from them. And the last thing I want to show you is I saw a really cool complex correction that is very much like what we're in right now. Where is it? Oh, right here, this one. All right, let's go on the 5-minute chart. This is the last thing I'll do. So you see this? We came here. This is W, X, Y. W started here. X ended before the origination point of W, and Y ended above W. This is a perfect double 3 right here. Do you see that? So study this. This could be exactly what we're in right now, and our correction could look exactly like this, or it couldn't. But this is just an example, and then you see how you get out of it, right? This is the continuation, but then boom, you come back up. In our case, we're likely to go down a little more to finish our 5th wave. So that's just, look at these things, because the market offers opportunities to see them on small time frames, on larger time frames. It's all fractal, so you should be able to learn even on a small time frame. All right, that's it from me. Hope that was helpful. Hope that was useful. Good luck trading if you're trading, and I'll see you guys tomorrow. Bye.